Hey everybody, welcome to the live stream. Today is Monday, July 27th. So welcome to the Cressivo channel. If you're new, welcome aboard. If you've been here for a while and you're returning, welcome back, of course. I love this live stream. This is where we talk all about options with the primary purpose of creating yourself income on a regular basis. I prefer weekly income. I mean, who doesn't prefer weekly income over monthly income? If you had the choice, would you want to wait like a whole month to like get a paycheck, or would you want to get a paycheck every single week? I think frequency is better, right? So I prefer frequency, and plus, like, you're not tying up your capital for extended periods of time. Like, we don't know what the market's gonna happen, where the market's gonna go. I do not know where the market's going to go. I don't know if it goes up or it goes down. The purpose of trading options is just to use likelihoods to create income on good quality stock that you wouldn't mind buying if you did have to buy it. But generally speaking, I prefer if I sell a put that I don't have to buy the shares, because I want to drive income off of my cash as much as possible. So that's what we do in this channel. And on this channel, we go through a live account. I'm going to go through this live account. Here are the positions. And for a while, I was only putting trades on during this session, but the sessions got too long. So I really try to keep these sessions at 30 minutes if possible. But if you guys have a lot of comments, I'm sure that you guys have noticed as we've been going, I don't usually close a session without responding to everything, because I want to make sure that you guys get value. That said, I've put some trades on, in between, like while I'm not live, but I'm going to go over those here with you today. So let's talk about a couple things. Let's talk about Monday, first of all, because Monday is like the best day of the week. You had some stuff maybe expire worthless on Friday, or maybe you got to sign some stuff on Friday, and Monday is the day to make some adjustments. So me personally, I like Mondays and Fridays the best. A lot of times people ask me, like, what time do you trade? I mean, you trade whenever it fits. Like, I don't try to time what's going to happen when, like after lunch or first thing in the morning. It's just whenever it fits your schedule is how I do it, right? So let's go through the positions first, because it's been a minute before we've reviewed that, and then we're going to go through the realized gain. We're going to talk about paper losses. Let me know in the comment section if you guys have questions. My intention is that you guys become better traders and ultimately create yourself income on a regular basis. That's what's important. So AVGO, we started with this. That was like one of the first trades that I put on when I created this account. I think it's been like 2 months now. And I bought 100 shares at $4.77. Well, AVGO is down a lot. Now, typically when you sell a covered call, you don't want to choose a strike price that's lower than your basis, because if you had to end up selling your shares, you would take a loss. Now, the past, I don't know, maybe a week or so, I've been selling some calls anyway underneath my basis just to bring in a little bit of cash. Like this morning, I sold this that expires on Wednesday. So today's Monday, only 2 days, a 410 call. It's really far away from where the stock is trading at 381, and I took in 32 bucks. So my intention is to manage that a little bit more actively. Now, you can manage your account like actively or more passively. I like to do stuff a bit more actively, because I just try to make as much money as possible, but you don't necessarily have to do it that way. Like, basically, like, as long as you understand the fundamentals, selling a put, which means you're taking in premium for committing to buy shares if the price drops below your strike price, right? And then if you get assigned, take those shares, buy those shares of that ticker, because presumably you like that ticker. Don't be selling puts on stuff that you don't want to hold. That just makes no sense. Like, it has to be a stock that you like, and don't be like mesmerized by the dollars. Like hey, this put pays $800. You want to calculate the rate of return, because that's the most important thing. Then you can compare like something apples to apples, right? So that's important. And then don't be afraid of assignment. Listen, being assigned on a short put is not a failure. Like, you have to say to yourself initially, before you make the trade, hey, I'm going to sell this put on AVGO, and if the stock drops below X dollars, I'm going to buy 100 shares. So you have to think, you should, and you must really, to be successful, think through that scenario. You know, do you like the ticker? Are you okay buying that ticker at that strike price? Does it fit your account size? Now, this AVGO trade, I should have never even put this trade on. I mean, I was showing you guys examples because this is a live stream about teaching, right? But basically, this was a $100,000 account, and I got 100 shares at almost $500. So it's like a big chunk of the account. So you want to ask yourself ahead of time, is this price appropriate for the size of the capital that I'm trading with? And then not just that, but do I have more money on the side to buy more shares if the stock drops more? Because really, listen, I did a video yesterday, a short, and actually I did a long today on a similar thing. Holding the bag. Such a cringy freaking expression that people talk about. Holding the bag. Listen, if you're trading a ticker and you like that ticker and you like it at, let's say, you know, $477, man, you should like it as well, even more actually, at $381, because stocks, the nature of stocks, and I don't understand why people just don't like inherently understand this. And it's apparent that people just don't, I think they believe it, but they don't actually believe it, if you know what I'm saying. Like, the nature of stocks is that they go up and down. Like, that is the nature of stocks. So when your stock goes down, that doesn't mean your stock is broken. That doesn't mean that there's something wrong with your stock. It just means that that's a function of how the market behaves, right? Like people are selling it for whatever reason. And it could be a variety of reasons. And honestly, it doesn't even really matter what the reasons are. I'm a big believer that you can only put so much in your head. And like, I just want to put the important stuff in here. I don't want to put any like nonsense in here, right? Like, because I can't fit that much stuff. It's kind of like, okay, I go shopping and I go to the mall and I buy some clothes, some new clothes, right? Some new outfits. And then I come back to my bedroom and I got a whole bunch of like clothes already in there, and it's already stuffed. And if I put new clothes in, I can't find like things that were already in there. Your brain is the same way. Like, you can only fit so much stuff up there. So I try to keep it condensed and only the important stuff. And that's why I don't watch the news either. I never, ever, 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 ever watch the news. And I'm not on social media other than YouTube, my YouTube channel for Cressivo here. But I'm not, I don't be looking on like Facebook or Instagram. I don't care whatsoever about that stuff. I got other, what I believe to be more important things to do. So anyway, getting back to AVGO, and I'm going to get to the questions as well in a moment. I did sell this call, and I'm gonna take a look at that. And as the next, like, let's say day and a half goes on, I'm gonna look at buying that back, because the way I trade now, a lot of times there's not any, let's say, necessarily right or wrong, right? Long time ago, I used to trade more passively and just let stuff expire. Like, just wait and let it expire. But now I try to be more active. I mean, I'm not really doing anything. Like, when I'm trading, that's how I make money, right? That's how I make a living. And so that said, I want to do a couple things. Number one, I want to maximize my gain, right? Always maximize your realized gains. And then also, probably more important than maximizing your realized gain is minimizing any loss, like reducing risk as much as possible. It is really easy to make money, and it's harder not to lose it, right? So the importance is really to reduce your risk. So I'm going to keep an eye on this for maybe like the next day and a half, and I'm going to buy that contract back if this starts to go to, like, let's say $10. That means I sold it for 32. I buy it back for 10. I lock in a gain and move on. And then some other positions that I have here, HPQ. So I have these 100 shares at 26, almost $27. And it's trading pretty close to where I have it. I had sold this call, I think that was like Thursday, Friday last week. This $27 call, I made 14 bucks. So not that much money, but really you don't want to look at, again, the dollars, but the rate of return. Oracle, this is interesting because Oracle, I had 100 shares initially. You'll see this, 100 shares that I paid at $244 for. Like, that's super high. And then I wanted to buy more shares and average my cost down, because that's really how you turn a losing trade into a winning trade. Now, to do that, you could do that one of two ways generally. You can either sell a put, or you could just go to the market and buy more shares. Now, I prefer to sell a put first because then I'm only buying shares if it dips and I'm taking in cash. The reason I didn't do that on this trade here is because this is this test account that I'm using Alpaca as a broker dealer, and Alpaca lets me use margin. You can see that I have this is a margin account, but they only let you use margin to like buy long shares of stock, and they don't let you sell a naked put. And let me explain to you what that means. When you sell a put, you can do that one of two ways, right? You can either sell a cash secured put, which means you have a cash account. I have a margin account, so you see margin marker right there. But let's say you don't want to use margin, and margin is leverage, by the way. Hey, I'm using some of my money and I'm using somebody else's money. I'm a big believer, like, why use my own money? Like, let's just use somebody else's money because it can maximize your gains, right? It's kind of like taking out a mortgage. Like if you go to buy a house, let's say if you have all the cash for the house, most people don't, first of all. So most people aren't in a position like, hey, I'm going to go buy this house for 1.2 million bucks and I'm going to write a check for it. Most people like have a down payment and then they take out a mortgage, right? So this is kind of the same thing. So you can sell a cash secured put, in which case, let's say I'm selling a put and the strike price is $100. Then I have to have $10,000 to back up that trade, to buy those shares if the price went down, requiring me to buy the shares, right? Or you can sell a put on margin, which means like, hey, I don't need $10,000 to put this trade on, but maybe I need like $3,000 or something like that. Now, it depends on what broker dealer you're with, and it depends on what the ticker is, because the margin is not really the same from one broker dealer to another and from one ticker to another. Really, it's up to the broker dealer on like, they want to manage their risk, right? So from a broker dealer perspective, they don't want you selling a put and then not being able to cover it, right? So they want to, it's kind of like when you take out a mortgage. The bank wants to check your history, like, I don't know, how's your credit, that kind of thing. How much money do you make? So this is kind of the same thing. So that's why it's different from one ticker to another. One ticker might be super volatile, right? Lots of volatility. And oftentimes on a volatile ticker, there's not as much margin that you can get when you trade that. So those are the two ways to invest. Now with Alpaca, I can't sell a naked put. So I did the next best thing, and I just bought 100 shares of Oracle because it was super low, right? And we'll see that here. So I had my original 100 here that I bought June 2nd. We could see the date. So it's been a while. It's been a minute, right? And then on the 24th, which was last Friday, I bought another 100 shares. Now, it shows up, and you guys might notice this in your broker-dealer accounts. Sometimes when you buy 100 shares of something, it doesn't show up as a line item, 100 shares at X dollars, because sometimes the fill is done in pieces, and that's not something that you can control. It just happens sort of behind the scenes. So the way this happened is that 53 got filled at this price right here. 23 got filled at this price. What I did before this live stream was I entered it all into the averaging down module, all these different pieces, right? So I have 100 shares at an average price of 118.33. You guys see that here? So what I did on Friday, I did this, and I don't know if I talked about it on Friday or if you caught that, or I don't remember exactly what we went over on Friday. But on Friday, I had sold this 119 call. So here's how this works, and this is super important for you guys to know. When you have 200 shares, right? See how I have 200 shares right here? I have 100 shares at one price, and then I have 100 shares at a different price, right? You can do one of a couple things when you sell a covered call. I could sell 2 calls at my average cost per share. We'll see is like 181 and change. Or I can sell 1 call at that 119 price and another call at that higher, 245 price. So I prefer the latter. So that's what I did on Friday. I sold this 119 call. It expires this Friday, and I got paid $330 for it. So here's what happens. This Friday. Now remember, let's all stay with us, right? I have 200 shares, right? So I have 100 shares that I paid a lot for. And that's kind of what we call like underwater. Like I can't really sell a call to that because they're not it's so far away. Like the stock is trading so far away from where I bought the shares. So what I want to do is to be active and still take in money. And this is addressing all those like goofy people that talk about holding the freaking bag, like this most cringiest expression I've ever heard, or one of them anyway. This is directed towards those people. It's not about holding the bag. Like if I like the stock, I like Oracle. I think Oracle's a great story. I mean, the price has come down. It really doesn't matter why. The reason is because they have a lot of debt, right? So they're building all these like AI powered centers. It costs a lot of money, but fundamentally, I think it's a good stock. And, there's a lot of analysts that are saying it's valued at a lot higher than where it's trading. It's got Larry Ellison, I think is the dude that owns like 40% of the company. He's a billionaire. So I look at that, like who, a billionaire is not going to be heavily invested in a company unless they believe in that. So those are some of the things that I personally look at when I think about trading, right? So I like the stock. So I have this one call against that one lot. Now what happens technically, like after this happens, let's say Friday comes and the stock ends at like 119.50, right? I'm going to get assigned on these shares, but I have to like tell the broker dealer which shares to use. Unless they pick, like they're going to choose whatever your default is, or you tell them. And there's a time requirement to tell them. So it's important that you understand sort of what the requirements are for your broker dealer. Like Schwab, as an example, you have to tell them before end of day on Monday. Interactive brokers, as a comparison, you have to do that by Saturday, I think, end of day or something like that. And you have to use a tool online. So different broker dealers have a few different ways to do that. But the reason I did this is let me not just sit and wait and sit on my hands while like Oracle's trading so low. Let me make some money on that. And who cares if it goes higher? If it goes higher, great. Then I'm going to sell those shares, tag it to those shares that I paid 118 for, right? And then I'm going to do the same thing again next week. And in the meantime, I made myself $330. Like, listen, it's all about making yourself money on an incremental basis over and over and over again. So that's that. And then I have these SMCI shares, right? This is kind of similar. I have 200 shares that I bought $47, $46. Right now it's trading at 29 bucks. I'm just going to wait on that for now. Again, if I had more cash or leverage in this account and I was able to sell a naked put in this account, I would sell a put on this. That's what I would do. And then selling a put, you're taking more money in, premium. You're buying the shares if it goes down, and then I'm averaging my price down. And this is also, guys, why you should only be trading like a handful of tickers. This strategy is hard to do when you got 20 like tickers in your portfolio. Not only is this hard to do because you got to pay attention to, okay, when's earnings, so you're not like surprised. At least you see perhaps volatility coming. But also you need cash on the side, right? Like you got to be able to target each one of those tickers. So really you don't want to be trading more than a handful of things. You don't need all that. And if you're trading like let's say 5 tickers, the best way to do that is to trade some non-correlated stuff. Not trade, like for example, I have SMCI, Oracle, AVGO, they're all kind of like tech type companies. The best way to do it is to bring in some non-correlated stuff. Like let me bring in, I don't know, like an energy stock or like some sort of cyclical kind of stock, like a little bit of, hey, or metals or something. Hey, this goes up, maybe this one might go up or down, and they're not correlated with one another, right? SpaceX earnings is coming out soon, by the way. So keep an eye on that. Listen, you can use, I was looking at this the other day, and I'm going to get to the questions too. I just haven't done it yet. I was looking at the earnings edge the other day. I'm going to type in like in the custom ticker SPCX. And this gives you a lot of info, right? Now, SpaceX is a new company, so I'm not going to have any history. So let's say if they've been around for tickers that have been around for a while, you're going to have like the past 5 years and how many times did it go up versus how many times did it go down. So you don't have that with SpaceX, but you do have what is the market implied move? So this is like a mathematical number, and this is just math, guys. This is just talking about like likelihoods. That's all we're doing. We're like using likelihoods to make educated decisions in order to create income on a regular basis. That's what we're doing. So the market is anticipating. Now, earnings is August 17th. So that's like, I don't know, 3 weeks or something away. The market is anticipating a move of almost 25%. Now, we don't know if that's up or down. The market is just saying, hey, this ticker is probably going to go up 24.5% or down 24.5%. So when we see data like that, that's why this app is so amazing and second to none. Because when we see data like that, if we wanted to sell a put, then what we should do is choose a strike price, like in this example, $80 strike price, a strike price that's lower than that 25% drop. Now you could do it yourself, like get a pen and paper and get a calculator or create a spreadsheet, or you can use this app to do it, and it shows you like on the fly and a ton of other value pieces as well. And also what it does is, okay, well, again, if I wanted to sell a put on this, then here's a good put, 8/21, because August 21, because it's after earnings, right? A few days after earnings, and the strike price at $80 is below like this 24.5% drop. Now, how much is this paying? It's paying $227 right here. Obviously, that's going to fluctuate with the market. How much capital do you need to put the trade on? If you're not using margin, well, you need $8,000, because if it's at $80 strike price and you're committing to buy 100 shares, 80 times 100 is 8,000. And then what's my annualized rate of return? Like you cannot, I talk to people so often, and this is probably like the one thing that most people are like the most lazy when it comes to doing when they're trading. They do not calculate the annualized rate of return. Do you know that I can't even remember the last time that I ever sold a put where I did not calculate the annualized rate of return. Old school, what I used to do before I created this app is I would have a spreadsheet. And I would have to like look at the broker-dealer site, find the price, plug it in. So it was very like cumbersome, a little bit manual. Or I would just kind of pull up a calculator like this, applications. I would just calculate it by hand, right? Like, and I have a lot of videos on YouTube. This might like ring a bell for you, right? If I'm making $227 and I'm putting up $8,000, my rate of return is this, but that's for like 3 weeks, right? So, like I don't know, divide by 3 times 52 to get like a rough approximation, right? 49. The math is not exactly the same because I'm just rounding off and I'm just using rough numbers. But what I'm saying is this: most people are lazy to calculate the rate of return. Man, it takes like 3 seconds. Don't be lazy, because if this number was like let's say 20%, I would not make the trade because it's not paying enough premium for the risk that you're taking. Like I want to make like 50% annualized return on the trades when I look at them. That's kind of what I'm looking at. So you want to make sure you do that. Let's get to some questions, right? So Joy says, how do you feel about Tesla right now? Tesla has long been one of my favorite stocks. Just because it went down means nothing. I mean, I've been trading Tesla for years. Like it went down a lot, and it's near its 52-week low. I mean, that's why, again, and I feel like I keep saying the same things. First of all, you want to make sure that the first trade is consistent with the dollars that you have in your account, right? So Tesla right now is $300 a share. If I sell a $300 put, I shouldn't only have like 30 grand in my account. I should have like more, because number one, you want to be able to take that trade, obviously, but more importantly, you want to be able to sell another put if it goes down more. Just because it went down doesn't mean anything. Tesla goes down a lot after earnings. That's a common thing. So they're making money, but like regular retail investors, they expected more. They expected more profit, and so they're unhappy with the earnings, and then they sell. It's a goofy thing, but like it provides opportunity for option sellers to capitalize on that. Also, what I see is I see a gap right here. I love gaps. I don't look at a lot of technical analysis. I used to, back in the day, I used to look at like, okay, MACD indicators and Bollinger Bands and moving averages and all these things. And I just used to fill up my head, man. It's like a lot of work, and I don't see the value in a lot of that. But I do very much like gaps. So a gap in the chart, like historically and typically speaking, gaps will fill themselves. So at some point, you know, Tesla's probably going to go back up again. Tesla's a great company. So it's funny, like I was talking about Tesla, I think last week, talking about Elon Musk. I view him as a very intelligent man and a visionary. And somebody said, oh my gosh, how could you like Elon Musk? Listen, this is not a political channel. I don't care if you're Democrat, Republican, you like Trump, you don't like Trump, you like Elon Musk, you don't like Elon. I mean, who cares about such things? The society creates things to divide people, like with those thoughts and beliefs. The fact is, the man is smart, I think, and I think Tesla is a great story, and I've been trading it certainly for, I don't even know how many years. I would say probably, I don't know, at least 10, 12 years, and it's always been a long time one of my biggest holdings. So I like it, and the volatility is high. So if we just look at the volatility, let's look in the app instead. So let's just go to the trade builder, and let's just go to TSLA here, and you could trade Tesla now 3 days a week. Used to be only 1 day a week. So let's look at Wednesday as an example. I don't know. Let's just look at something short term. Lots of different ways that you can make this work, depending on what your preference is, what your intentions are, that kind of thing. Let's just look at, I don't know, a $300 put as an example, right? So it's 25 delta. I need 30 grand because it's a $300 put. Right now, Tesla is trading at 308. So it'd have to come down $8, right? How much is the rate of return? 116%. Man, that's high. And so what I do when I see rates of return like this, I say, oh, let me back up a bit. Let me go a little bit more conservative. I don't know. Let's go to a 290, right? And now you see the rate of return is a bit lower. So that's the correlation between, you know, choosing your strike price, delta. These things are all correlated. Like if I'm choosing a really low strike price that's way far away from where it's trading, your return is not going to be as high, right? But 33% is a good return. And worst case scenario, you buy Tesla, a good quality stock, you buy it on sale. Your cost basis comes down based on the premium that you got sold, so you get it even cheaper, and then you sell a covered call against it. Like it's over and over and over again, one after the other. Has AVGO's gap filled yet? I'm not sure. I don't think so. And sometimes it takes a while. I mean, this stuff is not like now. I mean, it's right here. So right now, AVGO is kind of like sideways, we can say. It's a great quality stock. It's a big blue chip type company. Yeah, I think AVGO is a great stock as well. Historically, I hadn't really traded AVGO that much. I mean, I put it in this account when I first started this live stream because I think the return was super, super high. Joy, thanks for making the app more mobile friendly. Yeah, so let me talk about that. So this app is dope, super, super dope. I went back to the free 7-day trial. I took that away for a minute, and then I went back to it, you know, because like just try it, and you can try it without obligation. I mean, you got to put a credit card in, but if you wanted to cancel, you could. But I think that's kind of goofy to do that because there's tons of value, and it's $99 a month. Like it's very like it's. I mean, some people that are using this app, like, because I can see the realized gain loss, man, like it helps you make so much money. In this account here that I'm testing on YouTube, this account has made over $5,500 in realized gains. Who cares about paper gains? Paper gains are obnoxious and irrelevant, right? They don't really mean anything. What means something is how much cash did you put in your pocket that you can spend. This is how much cash I put in my pocket in order to spend. So that's the important thing. Hello, Michelle. Thank you for showing us the way. You're welcome. Man, I want to see other people successful. because I think options are the only people that are buying stock like and not trading options. They just don't know any better. For some reason, they don't. I don't know. They can't wrap their head around it. I don't know what the reason is, because once you see the light, once you see it and it clicks, man, there's like no going back. Like you can't unsee it. It's there. And thank you for the hearts. I appreciate that. What are your thoughts on Bloom Energy? I think Bloom Energy is amazing. One of my mentees texted me this morning on Bloom Energy, and I did respond back to him, but I didn't really take a lot of thought in that. Let's look at that together. First of all, let's look at that in the earnings edge, because that's like the best spot. Now you could look at it in the screener, or you could just pull it up here, because they do have their earnings coming up. And if you look at I'm going to look at their chart in the meantime. They've come down a lot. Well, today they're up 2%, but look at, so they were as high as $350, and right now they're, $188. Like, again, if you like the stock at $300, man, you should like it at 200, because it's the same company. Earnings is July 28th. The market is expecting a almost 24% move, but historically they've only moved about 10.5. That's a big edge that you got there, the difference between those two. It goes up more times than it goes down. And if we were to sell a put, we should sell it underneath that 24% move, right? And the strike price, based on that, would be 143. Look at that rate of return. Now again, like when I see a rate of return like that, I think, oh my gosh, that's like, significantly high, right? Super, super high. So for me, like I would probably go with a lower strike, because like, and this is actually a good thing to recognize. Pigs get slaughtered in the market. I always look at it like don't be greedy. Just try to make income over and over and over again, like a cycle, just on a regular basis every single week. I don't need to make 356%. I can go with a lower strike price and still make a lot of money. But I like that stock, by the way. Henry asked that. Do you trade CIFR? No, I think I've heard of that ticker, but I don't know what that is. I don't think I've ever traded that. And listen, there's lots of stocks. And here's the thing about trading. These strategies work whether you have a big account or a small account. They work the same. The only difference is what kind of ticker. Now CIFR, I'm not familiar with this stock and I never traded it before, but it's $21. So let's say if you have like a $10,000 account or something, you can't trade Tesla because it's not big enough, but you could trade something like this. So the strategies work regardless. Lorena says, I'm one of those so far. Oh, I love when people comment, and believe me, I'm not prompting any of the viewers to say what they're saying on here. They say it of their own accord, but I love that they share these kinds of the content and stories. Lorena, I'm one of those so far this week, around $1,100, thanks mostly to BE, which of course came from you. You did the work. I just it's so funny. A lot of people that I work with and have come across over the years always say the same thing. Like, you did it. That's what they tell me, right? No, I didn't do it. You did it. Like, I directed you, I helped you, I guided you, right? But you did it all. So bravo, Lorena, $1,100. How's that? So let me ask you, Lorena, and you could let me know in the chat, because I know that you're an app subscriber, and I'm not sure exactly where you got in at, because some people are paying like I don't know, $50 a month, depending on when you subscribed, right? Because I haven't changed anybody's pricing, but the most expensive is $99. So to pay $99 a month and generate an $1,100 return, like, how is that for a return on your investment, right? Of course, there's no guarantee in the stock market, but this app helps people really like find those trades, manage those trades, kind of evaluate those trades, and that kind of thing. And it's getting better and better all the time. Like, I am constantly building. Joy asked the other day about mobile. Me, I'm not a big mobile person. I don't even have my phone sometimes, and it dies, and I don't charge it, and it's whatever. But I do know that a lot of people do want to access and do things on their phone. So I am in the process. I've started doing some of it, making all of this, mobile friendly. So yeah. Okay, cool. Lorena says definitely worth it over and over. I'm telling you, yeah. This app is so dope. And it's so funny because sometimes I'll get like a goofy comment on YouTube. Like I can't remember who it is. Like there's one guy that like watches a lot of videos and he's got a lot of like comments and stuff. And then sometimes he'll say goofy things like, what do you think of this stock screener over here? What do you think of that? Man, there's like a million stock screeners out there. This app gives you not just stock screeners, but the best. Like, where can you find, the logic that I built into this earnings edge screener? I'm going to run it for you and I'm going to show you. Like, it's searching the entire like ticker universe. Who has earnings coming up in the next 14 days? And then show me the best trades. And then the other day, somebody had a suggestion. Oh man, I wish I could sort that. And I just said, okay, ask and you shall receive, sister. Let me sort that for you. I think it was Joy, if I remember correctly. So it just kind of pulls up all this stuff. Of course, BE is on top because it's got like that wicked high rate of return, right? It's still running. It's going to take a minute to run because it's searching a big database. There is no other app out there. I mean, there's apps out there that have some functionality. Hey, here's a screener, or here's how you could calculate this rate of return or whatever, but not with the comprehensiveness and the logic that this has, for sure. Yeah, it's going to take a minute. I am trying to like increase speed because I know speed is a big thing. Somebody recently canceled and they said your app is too slow. I mean, I am trying to make things faster, but it is searching a big database, so it takes a minute to do that. Let's wait a second, and then and let me get to some of those other questions as well. 95, 96, 98, 99. Okay, so let's say I want to search by price. Let me just start with the cheapest ones. Okay, I think I did a video on Peloton. Did I do a video on that? Maybe I didn't. I think maybe I didn't post it yet. Sometimes I batch record videos and I record them, put the content together, and then I'll post them. Like, okay, for somebody that doesn't have a big account, like maybe I want to look at a Peloton put. Like from an earnings perspective, it can be a great opportunity. DraftKings. I used to hang out with a guy who traded a lot of DraftKings. I personally never really liked that company. But if you like that company, and I don't know if he's watching because sometimes he watches my videos, if you want to sell a put on DraftKings, there you go. And here's the implied move. Here's historically. It goes up 3/4 of the time versus down 1/4 of the time. And here's the trade up 50%. So yeah, so it's pretty dope. Henry says I trade CIFR weekly. I sell put options on it so that if assigned, I own it below the Bollinger Band. And when I sell a covered call on it, I sell above the higher band. There is value to that. Listen, I used to use a lot of that stuff. Bollinger Bands, I would just put them like, you'd overlay them on your chart basically. And it kind of shows you okay, if the stock is trading below the bottom band, that could be a good buying opportunity, right? Especially short term. So they might be something that can be helpful. And so for Henry, for sure, that's how he trades. And I think that's great. Me personally, I just try not to make it too much work. I just want to spend 15, 20 minutes a day. I don't want to look at too much stuff. I don't want to fill up my head. But they do have some merit to them. Bollinger Bands, MACD, moving averages. Those were probably my main things when I was using technical indicators. At some point, I think I'm going to do a video on technical indicators because a lot of times people ask about that. So thanks for sharing, Henry. How do we filter on the premium that we just collected today? So here's how the premium works. On your positions page, let me go to that. Let's see, positions. Now, if you have your app, your account synced through the settings page, you sync your broker dealer. You can always like resync it right now. Like let's say sync it again. So your positions page is going to be like a live dashboard, right? So like let's say I just I think this morning I did this AVGO trade, and then it's on here right now. So you'll see that right away. And then you'll also see this right away, premium on open. That means how much premium do I have on open contracts? And we can check that. I keep closing my thing. We can check that if we wanted to by just counting up the premium. So let me show you that. So for example, I have $32 in premium here, $14 in premium here, $330 here, $35 here. And if I counted that up, that comes out to $411. Was that your question? How do we filter on the premium we collected just today? I can, maybe that kind of gave me an idea of, I can make this box maybe clickable where you can click into that and then pull that up as a listing. So many different ideas. As I talk and as I hear other people talk, I'm like, oh man, that would be a good idea. Let me add that. But it takes time to do that, right? Like right now I've been running all these prompts and I run them as I'm talking to you guys as well at the same time. So I can add that. So stay tuned, Joy. Henry says I would get CIFR below $20 and then sell above 25 regularly. Yeah, like how nice is it to keep using options on a regular basis to create yourself income ongoing? Like, how's that feel, Henry? I think it feels pretty good. Like there's no other gig, you might say, around like option selling. Real estate is kind of cool, but it's a lot of work, right? Like, and I've talked about that before. I know some people that have done like drop shipping, Amazon, that kind of thing. Man, that's a lot of work too. Options, like, I don't know, you can like sit at your counter in your pajamas, like with a laptop. You can be at your house, you could be traveling, you could be overseas in another country, it doesn't matter. And there's no gig like it, for sure. Let's see. What are the other questions here? Daryl says, have you ever been assigned before the date? I haven't yet. Does it depend on Friday's expiration price? That's a really good question. I'm glad that you asked that, Daryl. So let me explain that. Yes, I have, but it's not common. So the question is, like, for example, let's go here and let's say I have this. I think I have one that's in the money. Let's take a look. Oh yeah, I do. Oracle, for example. So I have this $119 call, and right now the price is $119.75, right? So anytime the contract goes what we call in the money, like in a call, it's trading higher than your strike price, or in a put, it's trading lower than your strike price, it can be assigned. So it's up to the person that's long that contract. Now, usually it only happens though on expiration date. So, and that's advantageous to sellers, because here's what that means. Like Oracle, as an example, it could like chop around, maybe go up and go down, and then it doesn't get assigned, comes back down again, and then I sell another call on Monday, let's say, as an example. For the percentage of the time, like it would be more likely to get assigned early if it's like super deep in the money. If it's only a little bit in the money and there's time to go, it usually does not get assigned. But it's not up to you. It's up to the holder of that long contract. So really also, and this is important to note, when you have positions, make sure you pay attention to your platform. Like maybe me, I usually have it set up where I get notifications, if there's a trade. So I see right away if I was to get assigned. All right, last question. Evan says, what does it mean when a company's earnings are coming out? How does it affect the stock, and how does it affect our trading? That's a good question. And I don't know, there was, and I think his name was Evan. I remember that because my son's friend's name is Evan. There was a young kid who emailed me recently, and I don't know if this is you, Evan. Tell me in the chat if this is you. Young kid, like, I forget, 20 years old or something like that, interested in trading. Your neighbor told you about it, sent me an email, maybe even a couple emails. And I didn't reply to that yet. It's not that I just haven't had time. But your email to me, if it was you, and I'm not sure if it was, let me know in the chat, was inspirational, because I love seeing young people like like wanting to learn options. That's amazing. Man, it's so life-changing. So I mean, I started young because I started trading a long time ago. But to think of like, man, I wish I did this sooner, or I wish I learned that sooner, and that kind of thing, bravo to you. Number one. Number two, let me answer your question. So when earnings is coming out, earnings means, I keep closing this by accident. Earnings means that the company is going to share information with their shareholders, basically, and the public at large. And it happens on a quarterly basis. And it's basically them saying, okay, well, here's how much we expected to make this quarter. Here's how much we actually made. And then a bunch of other things. And the reason why it affects our trading is because it increases volatility. And volatility is kind of like how much swing. Like it either can go up a lot or down a lot. So it increases the volatility in that particular stock. And the reason why, as option sellers, higher volatility is good is because we're paid more. Think about it. It's kind of like I don't know, like let's say as if you're an insurance company and people are expecting a hurricane, right? But we don't know if it's going to happen or not, and then everybody's rates go up, and usually the hype is bigger than what actually happens, right? And you get paid more for the risk that you're taking. So that's kind of how earnings works. Let's see. Thanks for these daily live valuable info. That's what Daryl says. Very underrated. We appreciate you. Thank you. I appreciate you saying that. Man, this content is solid, right? I mean, I want you guys to share your successes with me, because I love that. Like, I love when you guys say, hey, I started trading at blah, 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 and I sold these puts, or I sold these calls, and I made X dollars. I love that. Listen, the world is a better place when there's more happy people. And money is not necessarily the most important thing. Health is important. Health is probably the most important thing, right? Love and connection, relationships are I think probably more important than money. So money is not like uber important, but it is super important. I'll say it like that. It's not uber important, but it's super important. And most people's moods and things are affected by money. It's like, I don't know, it's kind of like the thing that happens, right? And sometimes we can't help it. So if you can use options to create income, like let's say you have a job already, but you don't really like your job, and you got some couple bucks in the bank, or you have like an old 401k that you rolled into an IRA, or you could roll into an IRA, and you can create some of this ongoing income for yourself. That is an amazing thing. Nikki Clark. Nikki has been on this channel since the beginning, I think. Nikki, I think so. There's been a few I'm gonna call you guys old school like Cressivo, options queen, whatever you want to say, that you've been around from the beginning. I appreciate you as well. This is the most I have been green selling options. I will never buy an option again. Yeah, buying options, man, is for suckers. Let me tell you, buying an option is kind of like, okay, oh my gosh, I think it's going to go up, but you have to be right about the direction and the price or the time frame. Like how quickly will it go up? And buying an option, I always say, is like buying a scratch ticket at the store. I could spend $5 and buy a scratch ticket at 7-Eleven, and I can turn that $5 into 10,000, but the likelihood is so small. And buying options are the same thing. Dude, I don't know where the market's going to go. Like who pretends that you think you know where the market's going to go? Nobody does that. Like, if you want to gamble, just go to Vegas and like play slot machines, or I don't know, whatever. Yeah, but if you want to make money, income on a regular basis, that's when you sell options. So Daryl, I wholeheartedly agree. Never buy an option again. Laughing emoji. I love that. All right, I got a jet. I'm getting some furniture. I just moved into a new place recently, and they said between 12 and 4 they're delivering some furniture. And at some point I need to, because I got a messy place right now. I gotta put my things in order, and then I want to make a little bit better videos, because right now I'm just up against the wall because I got a big mess over there in the background. Somebody said some ugly remarks yesterday on my YouTube. It's so funny, like three separate things, and I don't care about that really. I mean, most of my community is like 99% is amazing, but he was like, your background sucks. And I don't spend a lot of time on video. Like I spend time on content. My content is solid. I promise you that, guaranteed. Like 100% guaranteed. My content is on point. But it has been on my list to do like, let me spend some more time on the video part of it, like what it looks like. So stay tuned for that. All right, I'm going to jet, and I want to say thank you for joining me on the live stream. If you had to hop off, or if you ever miss these live streams, just they're all the recordings are all here on YouTube, and I'm in the process of going back through and summarizing some of them because they're kind of generic, and I'm adding like chapters, and to make it easier, let me show you guys what I'm talking about. Let's see. So I'm adding. Like if you go to now this is my page, so yours looks a little bit different, but if you go to like these, and by the way, just so you guys know, I want to share this with you. This is the money that I make on YouTube as an example. I'm not doing this for the money at all, because look at the money, $4, $3. Man, you think that's going to change my, that won't even buy a, that won't even buy a sandwich or whatever. So the reason I'm doing this is to change people's lives. So sometimes for those of you who might be wondering that kind of thing, this is my page, so I'm showing you. But anyway, my point is, here's all the live streams. Now, a lot of them are generic, right? So like how do I know what you talked about when, you know? So over the weekend, I started kind of like putting together like different thumbnails, different titles and different descriptions. And then I also, I'll show you guys, also added like chapters.
Check this out. This is a cold plunge tub, and it sells from $8,000 to $15,000. And this is an infrared sauna. It sells from $8,000 to $20,000. Both of these ship directly from the brand.
Hey everybody, welcome to the live stream, the Cressivo live stream, where I come here on YouTube every weekday, 12 o'clock Pacific, and go through all kinds of stuff regarding options trading, selling options to create. Close that. And where was I? I was right here. Why the name Cressivo? You know, that's a good question. There's a kid, his name is Shane, that I hired a long time ago. I think I hired him like maybe, I don't even know, maybe almost 10 years ago. And he created an app for me. And it's still on the iOS or Apple store, but I haven't really paid a lot of attention to it. It's called Follow the Whales. And Stock Stickers is my other app that I launched a while back. And then his friend was also working for me for a period of time. He was a programmer, like a developer. And when he was helping me more recently, I would say that like 3 years ago or something, I don't know, I never really branded anything as far as a name. And I can't remember the kid's name, Shane's friend who was also working for me. He thought of the name, and I was like, oh, that's kind of interesting, Cressivo. I don't know. It doesn't mean anything. I just thought it was kind of like, sounded good, and then it just kind of stuck, and yeah, that's where it came from. So there's no real story behind that, sorry to say, and that's the story. Anyway, 12:53. It's so interesting. I try to stick to half an hour, and I just go on and on and on. Evan says, yes, it was me in the email, LOL. Thank you for the information. Evan, I want to say you inspire me. My son is 21, so I think you guys are in similar ages. And he has a really good friend's name is Evan. That's how I recognized your name. I love when I see young people embrace investing and want to learn, because this is life-changing. At some point when I have a free minute, I'll reply to your email. I just hadn't had the time. I think you asked about like what can I do to learn more. I am launching a new Academy app, so stay tuned. Make sure you guys are all in my inner circle. So if you go to cressivo.com, go to inner circle here and join this list. It's free. You just put your name and email, and then when I have new stuff come out, I'll send you an email on that. So make sure you go in there too, Evan, because I think that would be valuable for you once I relaunch that Academy app. That's a good way to learn, because I know that you were asking about that. Okay, cool. So thank you again. That was my like long-winded thank you to all you guys. And come back tomorrow, same time, 12 o'clock Pacific. Get the app. It's super dope. 7 days free, $99 a month after that. If you want one-on-one mentorship, let me know. I only work with a couple people at a time. That's not a line, by the way. It's just a fact because there's not enough time. And reach out. You can reach out through here as well. And then generally maybe we have a little bit of back and forth on email, and then connect on Zoom and see if it's a good fit. Because some people do want that and need that sort of, extra hand-holding type of help to help you be successful. Anyway, I will see you guys tomorrow. In the meantime, have an amazing day, and happy trading.